Well, hi everyone, and welcome to the Buffett and Beyond Research Saturday ETF report for November 9th, 2024. And boy, we have some good numbers to show you all out there after this unbelievable week. And remember, if you want to live on the beach like Jimmy Buffett once did, you've got to invest better than Warren Buffett does now. And the first thing we want to do is look at the NASDAQ 100, and its symbol for that ETF is the QQQ. And folks, here's that line. It's a big line all the way back here, and it broke through to new highs. And now we're seeing if it can hold that line. So here's a big line in here. And you can see we are now above that 20-day moving average, which is the green line. Went down, didn't even touch the 50-day moving average, which is this blue line down here. And finally, this has turned up a little bit, but we're in overbought condition, especially with the short-term indicator up here. We're overbought. We'll see what happens. Here was that little buy signal that we got last week when we took, or the past week when we took our hedges off. This little right in here, we'll see it on the Dow Jones also. In fact, let's look at the Dow Jones, and there it is. This was the first signal in here. In other words, the market is making a lower low, and this indicator was making a higher low. It went up nicely, and then it came down to fool us. And boy, that was a nice drop. But it held right in here, and that's the important thing. And then the market just took off on Wednesday and then Thursday. And I'm recording this late Friday. And down here, yeah, it finally turned up, and that was nice because this was the weaker of all the indices. And this intermediate term indicator down here was just pointing down. And then finally, when it turned, it really turned. Of course, the election had something to do with it. So there you go. It was an event-driven return back up to give us a buy signal in here. And when we look at the oil and gas, well, the oil and gas has been having a hard time because the price of oil has been going down. In other words, as people worry less about the Middle East and Israel maybe cutting off Iran's oil supply or any type of thing over there, the price of oil goes up, and then as the fears abate a little bit, then the price of oil goes down. So that's why it's hard to invest in oil and gas, because it's all over the place, and so much of it depends on the emotions of people and things that are happening around the world rather than what they are selling. In other words, if you're selling sneakers and you have a good marketing plan and you're selling a lot of them and you have good marketing, that's one thing. But here, daily, the outlook on oil can change, with just one country saying we have extra reserves, or another country saying, hey, we're going to cut down our supply, the daily supply that we're selling, on and on and on. So there's so many players out there, very, very difficult to make money in oil and gas. And then when we look at energy, same type of thing. But we did get a buy signal in here, and it came up very, very nicely, gapped up in here. And gee, look at this. We are at these old highs again. So we'll see if it can hold. Next week or this coming week is going to be quite a week, folks. And let's look at the technology, the XLK. And we can see we got a buy signal down here. It bounced off the 50-day moving average up here, cleared the 20-day moving average. Of course, we have all these gaps in place, and the markets hate gaps. And the rule is that the market will come back and fill that gap. Of course, over here, we had this gap down, and we knew that someday the market would go back up and fill that gap, but it went up with another gap. So we're looking at this and saying, I can't make any sense out of that. But again, we're short-term overbought in here. And look at this line here. We are, again, back at previous highs from way back over here. And when we look at the semiconductor, we can see, gee, it did rally with the other stocks. Now, I just want to bring out one point here. We are going over each and every stock, especially in the semiconductors. And the thing is that there are so many companies in the semiconductor field that are really just so-so stocks. So it's just a few of the semiconductor stocks that are really making money in here. So we just have to be careful with the semiconductors, because everybody says semiconductor, it's got to be a good company. We've come across so many companies that are just so-so companies that we really wouldn't invest in them. And that's what we're looking at here. So technology, let's go back to that. Technology is looking nice. You know, we're going from the lower left to the upper right. But when we come to the semiconductors, it's kind of like, gee, we're not doing much of anything. And that's because of so many stocks in the semiconductor business that are just not making good money. Now let's go over the transports. Well, we look at the transports because we want to see if the signals on the Dow Jones Industrial are holding true, because the transports have got to go up also if the Dow and the other indices are to go up, because the transports, again, as I mentioned every week, carry the raw materials to the production sites, and then the production takes place, and then it's transported to the retail outlets. And if you don't have transportation working, that means the rest of the economy is not working so well. But we did reach, gapped up again. Of course, this is all on Wednesday for the election. We found out the results of the election, and we'll see what happens here this coming week. Utility stocks. Now, the problem is that we had a nice period, a long period of several months where interest rates were coming down, and then all of a sudden interest rates started going up again. And as the market kept thinking about how much debt we have in our economy, that they're saying, okay, they're going to have to sell more bonds into the market, and that's going to raise interest rates, because who's going to want to buy them at the present interest rates? We need higher interest rates. I'm talking about the bond market, folks. We need higher interest rates. But look down here. We're oversold now in the intermediate term. We're getting little buy signals up in here. And with the intermediate term turning up, we may, assuming it's turning up, it looks like it is, then we may have something here. So as the Federal Reserve begins to lower interest or continues to lower interest rates, then we should see these bonds or the utility stocks rise as people are trying to lock in higher interest rates on their investments. So we should see a rally from here, and it looks like we're getting set up to do a rally in here. This is a nice little signal in here. And then also down here, the intermediate term signal, that's what we would like to see turn up. And let us look at our ETF sector stars. Now, there are some ETFs out there that perform better than the S&P 500, and we plotted them plenty of times here, and we go into those sectors that can outperform the S&P 500 over the long term, and we pick the best stocks out of those. And right now we have about 18 stocks, and this portfolio, well, the QQQs, we measure it against the QQQs, the NASDAQ 100 up 25.5%, S&P up 25.7%, so they're running hand in hand. But the top stocks in all those ETFs that we picked out, up 36%. Folks, we're up 6.6% over 1 week. Very, very nice portfolio. You want to see a better one? Let's go to the top stocks in the NASDAQ 100. And these are strictly out of the QQQs, the NASDAQ 100, and we pick the top stocks, or that we feel are the top stocks out of that index, and it is up 44%. Again, the market is up 25%. These stocks were up 44%, and this is my favorite portfolio. It's also one of our test portfolios. Now, last week it was up 36.6%, so we're looking at almost an about a 7.5, 7.4% return on this stock, on this portfolio over the past week. Yes, we did very, very well indeed. So, folks, we had an unbelievable week in the market. Let's see this coming week if it can hold new highs in plenty of the indices and those lines in the sand will be tested this coming week, because now the market doesn't have to worry about an election. It doesn't have to worry about the Fed lowering interest rates. All that happened this past week. Market loved it. And now the market is going to sit here and say, now what? And how do we get rid of that debt? So that will be the next worry that we're going to get into. But the holidays are coming, and we just might have a nice holiday season in the market, folks. This is the nice time of year as we get toward Thanksgiving and then the Christmas holidays. And so we should see more upside action. And even with our portfolios, our top one up 44%, that's very nice, folks. And don't forget, those same stocks were up 90, almost 100% last year. And I'm talking about 2023. So in 2024, we're up 44%. Yeah, it slowed down a little bit, but boy, I think it's the leading portfolio out there without taking undue risk. And don't forget, we can hedge those portfolios, and we do from time to time. So folks, you go out, clear your heads, have a great weekend with your family, have Sunday dinner with everybody that you know. And folks, you have a good weekend, have a safe weekend, and we'll see you right back here in a couple of days.